I will take it from you before the day's over, I promise. All right, guys. So quickly, let's review. What is my accounting equation? All right. Assets equals liabilities plus owner's equity. All right. And under assets, I have cash, supplies, prepaid insurance. And what was the one that we added on Friday? We just went over it in the bell ringer. Accounts receivable. Okay. My liabilities, we have accounts payable. And remember, it's slash the company name, whoever owes us, or whoever we owe. And then our owner's equity account that we know of is owner, comma, capital. Okay? What does accounts receivable represent? Not money I receive. Money that is what? Owed to me, right? If I get money, then it goes into cash. Accounts receivable is I've done the work, so I'm owed the money, but I don't have cash in hand yet. That's what accounts receivable is. This is my IOU column. I own that account. Okay? So anything we own is an asset. All right. Also, you want to realize, here we go. I'm using my notes from before, so. The 4 transaction types that are going to affect owner's equity. Can somebody let Miss Avery in, please? Drake Frederick. I met you, but I was... Drake's a gentleman. He'll do it. All right, the 4 transaction types that affect owner's equity. The first type is our owner investment, right? We have to invest in our company before we have anything. Is that going to make owner's equity go up or down? Up. Owner's investment makes owner's equity go up. 2 would be revenue, transactions, or sales. Is that going to make it go up or down? Owner's equity. It's going to make owner's equity go up. 3 is expenses. Is that going to make it go up or down? Down, right? Expenses decrease owner's equity. And then we have withdrawals by the owner. Is that going to make it go up or down? Down, right? Because while the owner technically still has that money, but they have it for personal use, remember? And so we're just thinking business book-wise, owner's equity is going to go down. The account for withdrawals is actually going to be called drawing, comma, and then we're going to have the owner name. Okay? Keep in mind with revenue that your 2 things, you have sales and you have sold on account. These are the things that you're looking for as far as revenue go. Oh, I need the word on. Oh, hold on. And this is my tiny little word on in between there. And like I said, those are going to increase owner's equity due to revenue. So you may not actually see the word revenue on your test or on your homework, you're going to see sales and sold on account, but that's what revenue is. Everybody understands that? Okay. All right. So everybody's good with this? These accounts, where they go, what they are. Yes? Okay. We did work together 1-3. So let's do on your own 1-3. I will not make you do it on your own. You will do it. We'll do it together. Zoom in. So that is page 10 in your workbook and 17 in your textbook. And again, we're just doing pluses and minuses right here for now. 17 in the textbook, 10 in the workbook. So again, remember, the textbook number is always up top, and then the actual workbook number is down here. You already started it? You're on top of it. Okay? All right. So, gentlemen. Number 1, we sold services on account to Navarro Company. So what two accounts are going to be affected? We sold on account. Right, accounts payable, not accounts payable. Accounts receivable. I don't see anybody. What? Why is it accounts receivable? Because I sold on account. All right, get it for me, Avery. I have no idea. I sold on account. So remember, accounts payable is money I owe. Accounts receivable is money that is owed to me. Oh, awesome. Thank you. Does that make sense, Macy? Accounts receivable is money owed to me. Accounts payable is money that I owe. And that will increase our owner's equity, because remember, accounts receivable is a revenue, and revenue is going to increase. So if we increase, and you can just say, I mean, you don't have to write revenue, but we're going to increase due to revenue. Does that make sense to everybody? Okay. Number 2, received cash from sales. All right, so cash is going to go up. And it was sales, and what did I say sales was? Revenue, and revenue does what? Increases owner's equity. Number 3, received cash on account from Navarro Company. All right, so cash is going to go up. I received cash on account from Navarro Company. What? Accounts receivable, right, is going to go down because they owe me less money. I have cash instead of the IOU. That make sense? Another thing to look at too, guys, because look, in my book I'm saying received cash on account from Navarro Company. Navarro Company is right here under accounts receivable. You know that it's not going to be accounts payable because this says Barrett Company. No, we said up here they owe me something. Does that make sense? On number 1, they owe me something. And so on number 3, they've paid on that. Does that make sense? Okay. Number 4, we pay cash to the owner for personal use. All right, so cash is going to go down. Owner's equity will go down. And it's a withdrawal. I'm just going to do, that looks more like a C than a parentheses, but. So WD for withdrawal. And then number 5, paid cash for rent. Are going to do what? Both are going to decrease. Cash is going to go down, owner's equity will go down, and it's because this is an expense. that make sense? Okay. Now you had, for yesterday, and I told her to tell you to hold on to it, 1-1 and 1-2 application problems. I'm going to, yes. Let's do 1-2. Let's go over it, and then 1-1 I'm going to take up and do for a grade. Okay? So 1-2, textbook page 19, workbook page 12. So there's only 3 transactions, and they did the first one for you. Right? What do you mean there's only 3? Oh, no, sorry. We go on to the next page. Tara thought she did a lot of extra work. You're right. We go on to the next page. I apologize. So they did the first one for you. We received cash from the owner as an investment. So we increase cash $3,000 and we increase capital $3,000. Then we do the new balance for all of our accounts. So transaction 2, paid cash for insurance, $1,600. What 2 accounts are going to be affected? Cash and insurance. So what's going to happen to cash? Okay, it's going to go down by $1,600. And what's going to happen to insurance? Okay, it's going to increase by $1,600. Guys, there's a lot of chatter. Okay, so now we're going to figure our new balances. So for cash, it should be what, $1,400? So new balance is $1,400. 0 on supplies, $1,600 for prepaid insurance, 0 for accounts payable, 0 for accounts payable, and we still have $3,000 in owner's equity. Okay? You should not. The reason I say that is you need to figure the new balance after every transaction because you want to be able to look at these and say 1,400 plus 1,600 still equals 3,000. If you wait till the bottom to see if you balance, a lot of times people are wrong, and then you have to redo it all because you don't know where you messed up. Okay? So after every time you need to kind of visually look at this and try and add it and see if you're where you need to be. I didn't subtract 3,000. Do you want me to zoom in? There we go. All right, number 3, we bought supplies on account from 5-Star Supplies, $700. So, what 2 accounts? Supplies and accounts payable, which one? 5-Star. So, we're going to increase supplies by $700. We're going to increase the amount we owe on accounts payable, $700. And then we figure the new balance. So, $1,400, $700, $1,600, $700, 0, $3,000. Has everybody been right so far? Well, see, this is a good reason. 1-3 is extremely similar to this, so that's why we're doing this one together. I want you to see whether or not you did it right. If you did not, we're fixing it so that when you do 1-3, which is your assignment for today, I will take it for a grade. So make sure you're checking your work. And so you need to make sure that you have a balance and a transaction in each of these little squares. If you try and do per line, so you only do, you know, in each box one number, you're going to be running out of boxes. My people run into that issue last year. They ran out of boxes. All right. Transaction 4, we turn to page 20. We bought supplies on account from Riverland Company, $300. So what 2 accounts? Supplies. Accounts payable, which one? Riverland. And so it was $300, so supplies are going to increase by $300. Accounts payable to Riverland is going to go up by $300. And then we figure our new balances. So now we have $1,000 in supplies. And everything else, we just bring the balance down. Okay, number 5, paid cash on account to 5-Star Supply, $700. All right, So Kyle, what two accounts are going to be affected? And? Accounts payable what? 5-star. All right, so we're going to go down by $700 on cash. And we're going to go down by $700 on accounts payable 5-star. So now we only have $700 in cash. We still have $1,000 in supplies, $1,600 in prepaid insurance. We have 0 now on accounts payable for 5-star. We don't owe them any more money. $300 for accounts payable Riverland, and we still have $3,000 in owner's equity. Now let's take a quick check. 700 plus 1,000 is 1,700 plus 1,600 is 3,300. 300 plus 3,000 is 3,300. So we balance. Okay? So it's good to take that quick time to go across, because like I said, if you wait until the very end and you don't balance, especially on a test, you may run out of time. So it's easier to just do it as you go. Number 6, paid cash on account to Riverland Company, $200. Wade. What do I do? What's two accounts? Okay. So cash is going to go down by 200. And accounts payable Riverland is going to go down by 200. So my new balance. What? Okay. So I still owe $100 on accounts payable to Riverland. And that is a 0, not a 6. Okay. Number 7, Madison. Paid cash for supplies, $100. What two accounts? Cash and supplies. So I go down on cash, $100. I go up on supplies, $100. Okay, and so I have $400 in cash. I have $1,100 in supplies, and then everything else we just bring the balance down. So where you can see too that we're doing a lot of transactions, but we're not doing anything that affects owner's equity. We're not making any money, really. I mean, at the end of the day, I don't have any more money than when I started. Good thing is I don't have less money either, so I'm breaking even. Okay? And number 8. Macy, do you have it? Okay, received cash from owner as an investment, $1,500, so that's true. We're going to increase cash by $1,500. We're going to increase owner's equity by $1,500. So now I have $1,900 as my new balance for cash, $1,100 for supplies, $1,600 for prepaid insurance, 0 for accounts payable 5-star, $100 for accounts payable Riverland, and I have $4,500 for capital. So I have $4,600 on this side, and $1,900 plus $1,100 would be $3,000, plus $1,600 would be $4,600 on this side. So I balance. How did you do if I had taken for this for a grade? Would you have done well? Okay, good. Make sure before you leave today then that you turn in 1-1. I'm going to take that for a grade. And application problem 1-3. Do you think you can get that one done before the end? I say if you can, go ahead and turn it in. I won't make it due until tomorrow, but if you can turn it in,